My time, 6 o'clock
Good
your
morning,
time.
everybody. It is September 15th. It's the beginning of the week. It's Monday. We're about 30 minutes before the stock market opens, and we are going to live stream to analyze stocks and take a look at some interesting stocks that are going to be traded this week. And we welcome some requests out there from members of the channel. You know, you guys know the routine. If there's a stock that you're interested in, just put it in the chat. If you're not a member, no big deal. A $5 super chat, and we can analyze the company of your choice or become a member on the fly. With me is Daryl. How you doing this week, Daryl?
Doing fantastic, Victor. It's good to be here. Hello, everyone.
Yeah, it's great to have you. And I actually missed you over the weekend. I was on a member call, and we were talking about a company, and I'm like, man, I wish Daryl was here. Wanted you to take a look at a company because I really appreciate your point of view and looking at the charts, which if for those that might be a little new, looks like Kishore Conti. How you doing? Good to see you. Looks like Big House is in. Thank you, sir. You want to look at BROS? Glad to BROS. We can take a look at that. We were going to open up with a few stocks, so be a little bit patient. We'll get to that after we have a couple of stocks we're going to cover. And then Kishore, thanks for joining. For those that are new to the channel, what we do is we're going to look at stocks and we're going to look at the fundamentals of those stocks. I like to look at the value of business based on free cash flows and then look at the net present value of those cash flows. That is how, if you read books from these very successful, famous investors, that's the method that they use to establish what is the long-term value of that business. And that's what I do. And I also look at earnings per share and try to get a net present value based on earnings per share. And that is the most typical way that analysts establish a value for a stock. So I like looking at those two valuations. And then we go one step further. Daryl looks at the charts, looks at what are investors doing with these stocks. Are they buying these stocks up? Are they selling them off? What are the charts telling us about the activity around these stocks? So hopefully you enjoy the analysis. You find it interesting. Looks like we have Shadow Guy. He's having a cup of coffee. And it's not morning in Switzerland, but I'm having a cup of coffee here in the United States. Good to see you, Shadow Guy. And Kishore, it might be the case that things are overhyped. I can't argue with that. Might be the case. All right. So just a quick glance at the stock market. This is a heat map for the last month. So we're right in the middle of September. We are about to enter the second half of September. We'll see how we make out, but we have had some pretty hot stocks. And it's good to see Google make a 19.8% move in the last 30 days, because I think it's been a company that's been, the market hasn't believed in Google, and that's been kind of a silly proposition. I think Google's fantastic. So I'm glad that I'm a big Google shareholder, and I'm glad that I kind of stuck to the position that, hey, Google is just a fantastic company. It's valued really well, and it looks really good as a stock. The other stocks that are really doing well, Broadcom had really good earnings announced, and they also have a very prosperous future. If you look at how their backlog is looking, so they had a really, really good month. Look at this guy here, United Healthcare. Doesn't that look like a nice number, Daryl?
Yes.
39.68.
Yep. I'm doing pretty well in UNH.
And I don't think it's done. I don't think it's done at all. And some others are kind of joining the party. Eli Lilly up 18.92. Tesla 16.79. So some stocks are really, really moving. And that's good to see. Apple's up a little bit. And over the last month, Meta's kind of calmed down a little bit, but it's had a really good year. So has Nvidia, had a terrific year. So how will stocks play out? We'll see. That's why we invest. We spend our time analyzing so we can find the best stocks out there. Let me take a glance at the stock market. Where is it going? Looks like we're going to open a little higher. If I look at the futures are saying, hey, we're going to open a little higher. That's good. All right, perfect. So we've got a list of stocks that we wanted to take a look at. And we're going to start with Tesla. And I think everybody knows what Tesla is. It's a car company, but it's also a technology company. They're doing some really interesting things with regards to robotaxi and other items. It's a stock, I think, Daryl, that you wanted to speak to. And why don't I kind of give you the floor a little bit and let you kind of share what you wanted to talk about. And I think you need to share your screen on the live
Oh,
stream.
yeah, I sure do. I usually do that before we get started and forgot this morning.
No problem.
Okay, so Tesla caught my eye on Friday. This is one that I have owned in the past. I don't currently. I've bought or traded about 22 times on this one. I did really well on quite a few of them and not so well on a couple or 6 of my trades were losing trades. 16 have been positive trades for a 73% win rate. And for every dollar that I've lost, I've made $1.89. So this is one that I, not from a fundamental perspective necessarily, but I had a pretty good view that they were into a lot of different things that I thought had some potential. But I am a retired investor, and I try not to speculate a whole lot, but I don't mind doing it a little.
Mm-hmm.
So it caught my attention on Thursday or Friday when I was looking at the charts, and I hadn't been looking at it in quite a while. But this weekend, or actually just this morning, it was announced that there was $1 billion buy by Elon, bought about 2.57 million shares for $1 billion. And it looks like he's already up about 64 million this morning. So anyway, that was I had planned on buying it Friday. I had decided that I would probably buy this Monday. I already have it written down on my notes to buy some shares. It's already jumped up quite a bit just since Friday, so it's up another
Will
9%.
the will the jump in the stock price kind of change your plan, or do you stick to your plan?
No, I'll show you what my thinking is here. So Tesla just broke out. I ran a couple of scans on Friday. We were talking about them in the Discord. One is a 65-day swing high scan. So Tesla broke through that on Friday.
Mm-hmm.
So they're at a 65-day high, and they're also at a 13-week swing high. They've been consolidating for quite some time here. Whoops, that was the wrong button. They've been consolidating since for at least 3.5 months or so. But I'm going to try my drawing skills here to do some annotation on this chart and tell you what I'm seeing here. I'm going to draw. Whoop, that isn't what I really wanted to do. I'm going to draw what they call a cup and handle pattern. And basically with this pattern, it forms what looks like a cup and then pulls back slightly to form what looks like a handle. And the theory here is that you measure down from the recent cup edge, measure down, and that gives me about 37%.
Mm-hmm.
That is your target upside.
Really?
Yes. So it closed at 395 on Friday. So if I put 37% on that, that's a 541, which I think is going to be challenging. But I think it could at least reach these highs probably within the next, wouldn't surprise me if it's in the next couple of weeks, which would still be about a 28, 30% share price rise. So given that, I'm going to go back 2 years. I'm going to clear my annotations off here first. So let me clear my annotations. Okay, and then I'm going to go back 2 years because I'm going to show you a previous couple handle pattern and what happened with that one. Now this one is a little wider cup. You can see that there. So something similar to that. And then we have a little handle.
Yep.
Okay. So let's do the same thing that we did. The depth of this cup is about 43%. So if we measure from that point and do the breakout, 43% would get me to about there.
Uh-huh.
And look what it actually did. It doubled that percentage. So we have a previous example with this same or similar pattern and what it can do. So that's what I'm going to do today. I am going to hop into Tesla and try to run out about a 30% gain over the next couple of months. And I will do that with a stop loss. So if it doesn't work, then I can get out pretty quickly, limit my losses.
Nicely done, sir. The analysis is solid. Thank you so much for sharing that with us.
Okay.
So it's good to see Meredith Page on. Thank you so much for being a member. And we will look at STX. We're going to finish Tesla and then get back to that. Thanks for joining. And let me show fundamentals on Tesla to kind of put the fundamental kind of picture out there. That was really impressive, Daryl. Nicely done. And I hope it really works. And I will be watching Tesla with a different, I think, point of view or more expanded point of view on it. Right now, Tesla's moving 7.85% to the upside. Year to date, it's trying to get back to even. It will be back to even today if it opens up almost 8%. It's a big cap, $1.32 trillion. Revenue of $92 billion. And the PEs are super high. This is a very expensive stock. Keep in mind, you can buy Google Alphabet at probably 26, 28 PE. You can buy Meta at 32, probably down to 30. You can buy Microsoft at 30, 32. Or you can buy Tesla at 236. And we have price targets that are below the current stock price. The investor, from a fundamental analysis perspective, right? I like to think of a business and determine its desirability. Desirability is based on, revenue growth. If it's growing revenue, that's a very good thing. If it has very high margins, both on the gross margin line as well as the net profit line, very, very good thing. If it has very high cash flow, very good thing. Low debt, strong balance sheet, excellent. That's desirability. Okay. It's businesses like that. Look at the most valuable companies on the stock market. They all have those attributes, except for Tesla. You have, revenue that is not growing. And it's, and Elon Musk has come out and said, hey, it's going to be rough. We're not going to sell a lot of cars. Our competition is, and he doesn't say it this way. This is the way I view it, is competition's really everywhere. Yeah. You got Toyota coming out with great cars. You got great cars coming out on the EV side. So growth isn't going to exist for a while. And when we go to margins, that's where it's like, this is an undesirable gross margin, 17.5, pass. No, thank you. Profit margin is 6%, pass. No, thank you. Free cash flow margin, 6%. Again, these would be absolute passes for me. And unless the stock was heavily discounted, like, oh, this stock is expected to go bankrupt or just a terrible expectation and super discounted. Well, that discount may be compelling, but I'm not getting that out of Tesla. So the fundamentals don't look great. It's really, the investor needs to make a decision of, how do I treat Tesla? If I think it's going to be like, we talked about Rocket Labs, I think last week, such an interesting business. And, I love space travel. I think launching things into space is so neat. But if I invest with my heart, I oftentimes lose money. If I invest with my brain, I oftentimes make money. So I got to keep my brain as 100% of the decision maker when it comes to stocks. And on Tesla, investors have to decide, what kind of company is it? How will I treat it? For me, it's a total pass, because it's just a very, very expensive stock. I have the stock priced at like 20% value versus its current stock price. But investors have to make that decision on their own. There's a lot of stocks that trade way above intrinsic value, and investors continue to buy them. And I think Tesla is another one like that. Perfect. So I'm going to kind of interrupt our regular programming because I wanted to take a look at a stock that Meredith wanted to look at. She's kind of a new member, and I really appreciate her joining. And I wanted to look at Seagate, which is a stock she wanted to look at. Seagate did make some news. I think it was like, man, look at this chart. Holy smokes, up 127%. And Seagate is kind of an old school technology company. Seagate disk drives have been around for 30, 40 years. And the company is like, it's a brand that I've known because when I was assembling my computers 30 years ago, I was using Seagate disk drives. I was like, oh yeah, I know what Seagate is. So these guys have a forward PE of 19. That looks good. Market cap's 41.68. And there's a lot of disk drives probably going in that data center. Revenue of $9 billion. So analysts think it's a little expensive. It's had a terrific year. Will it continue to run up? Let's look. Let's take a look. So look at this growth. So there is strong demand. And I'm going to look at their website to see, did they introduce a new product? Is a new product like just really being used at high rates? And that's what's causing this terrific growth. And if it's a new product introduction, we could expect that, hey, these guys are probably going to keep doing really, really well. So let's take a look. So the gross profit is not the greatest because it's a hardware company. You think about hardware versus software. The hardware is less profitable. This one has a gross margin of 35%. It's had some pretty lean years, like in 23. Gets a lot of competition around it. And there is a lot of competition in storage, right? These drives have been around. I think their biggest competitor is probably going to be Western Digital that creates disk drives, and net profit margin is 16%. That's really good for a hardware company. And then free cash flow margin 899. So I want to look at their website and see, what is Seagate up to? What's making them so darn successful this year? And this is the product. You could probably, you could buy this on Amazon, and it looks like, so they make products for obviously your personal PC, gaming, cloud, edge, data center. This is maybe where they're seeing a lot of demand, network storage. Yeah, this is the Seagate that I'm been familiar with for 30 years. Interesting. Okay, so Seagate, is it, I would love to see the charts on this. I think the fundamentals of the business, they're very prosperous, but this stock price has really gone up. What are analysts saying about it? We've got 19 analysts covering it. The most optimistic analyst has a price target of 215, so not too far higher. And then some analysts are saying, this stock is really going to settle down and come down to $80 per share. The growth is expected to continue. We are in this fiscal year here that has already begun and is going to end June 30th of 2026. This year, they're going to grow by 16%. They're growing at 38%, or they grew, I should say, because this year ended June 27th. So it looks like they're going to have good years ahead of good growth, and their earnings per share is going to expand. So there's going to be good profit. So the question is, has the stock price really taken all this into account? And will there be additional appreciation of that stock price, or will it kind of sit where it's currently at, or will it continue to rise? That's the big question, right? Because let's say I'm putting myself in the position of, do I want to buy Seagate Technology? So let me let you take a look at the charts. And I'm going to build a valuation on Seagate, and then we can come back to my screen.
Okay.
And the floor is yours, sir.
So I just asked Meredith a question in the chat. Is this one you already own, Meredith, or you consider buying this one? You can let me know. Normally on these charts, I have a 20-day moving average, simple moving average, a 50-day, and a 200. The reason I use those on our standard charts that I show in these live streams is those are probably the most standard averages that chartists look at. But sometimes I will alter that 20-day moving average to be a 21-day exponential moving average. And what the exponential moving average does is it applies a higher weighting to the most recent trading data in that 20-day, 21-day period. So it reflects changes in that average a little quicker than a 20-day simple moving average. So I have that on this particular chart. And the reason she owns it already. So I don't know where you are on your average, but I would keep an eye, and we can do this in these calls, maybe once a week. We can take a look at this chart and just see how it's maintaining above this 21-day exponential moving average, because it is expensive right now. But if you already own it, then just keep riding this, because it has only dropped below that 21-day EMA for one day. There was another day. And other than those 2 days, it has not dropped below that 21-day moving average. If it drops below that and stays, for a few days, maybe till the end of a week, then you might want to start consider trimming it if you think the stock is going to be challenged. But as long as it stays above that average, I would hang on to it. I would just let it ride. Let your winners run.
Excellent. So I've got a valuation on Seagate, and just giving you, I actually had this valuation already done. I completed it on the 8th of September. And the only thing I changed with the discount rate, I'm beginning to lower the discount rate because interest rates are dropping, and discount rate is affected by the current interest rates. And so that's the only thing that changed. Everything else I double checked. It looks good. And I'm seeing that Seagate is priced 16% above the valuation I've calculated. I think each share is worth $164 per share, and it's priced at $195. So take that into account. Is this a stock that I would buy? It wouldn't be a stock that I would buy if I'm looking to buy stocks right now. Is this a stock that I would sell? I don't know. I don't own Seagate, but I do own several stocks that have this type of premium on them right now that have gotten there. So these are like Reddit's, ALAB, at Coinbase, right? But I think their businesses are going to continue to flourish. So temporarily, they're priced a little too high, and I don't want to sell it because I may get an earnings announcement and their numbers are terrific and it raises their value. And if I would have sold it, I'd be like, Chucks, I wish I would have had that stock back because I got the stock right by buying into it back a year, 2 years, 3 years, whatever time I've owned that stock. So I think, this is research on a stock that you're interested in. Good luck with your decision. I really appreciate you asking. And please get me your email address, Meredith. I would love to provide you a copy of all this research. I have well over 150 valuations. One of them is Seagate. I'm going to give you access to this repository if you get me your email address. I also invite you to member calls and give you access to the tools that I use to value stocks. So you can get me in my email me at victorhinvesting@gmail.com. I provided my email address in the chat so you could email me, and then you'll have a copy of this research on Seagate as well as every other company I've researched, and have that at your disposal. Thanks again for asking.
Let me show one other thing on the chart that we didn't talk about.
Sure.
So
Good morning, Justin.
So we have this, I mentioned the 21-day EMA.
Mm-hmm.
That is being confirmed by high relative strength, which is overbought at the moment. But look, it can stay that way for quite a long time. And it looks like the last time it got overbought, it stayed that way for almost 2 months. We're 2 weeks into this overbought. That's another confirmation that this thing could continue running. We also have positive PPO that is above the midpoint, another confirmation that this can continue running. We have an accumulation that is at a 52-week high, another confirmation that people are moving into this stock. And look at the money flow, it's been positive since May. So it has a lot of support right now from a technical point of view that this could continue running for some period of time.
Excellent. Thanks, Daryl. All right, we have a different request, and this request, who asked about Dutch Brothers? Big House Juice wanted to talk about Dutch Brothers, and Dutch Brothers started in Oregon. The reason I know that is I was traveling with my family in Oregon a while back, like, geez, 15 years ago. And we stopped by Dutch Brothers, and very nice experience. These guys up 22%, 94% over the 5 year. This is a company that wants to compete against Starbucks and, sell their coffees and their beverages. It tends to have a drive-through is my awareness of Dutch Brothers. So now I'm not a big restaurant investor. I think their margins are tight and it's always, a very competitive market. And it certainly is for coffee, right? You've got Dutch Brothers, you've got Starbucks, you've got
We had an IPO on Friday too of a brand new one.
yeah, so there's going to be plenty of competition. There's no big barrier to keep competitors out other than brand, right? And customers, liking that particular brand. In this case here, this is an $11.46 billion market cap company. Stock market has opened. This stock's opened a little lower, and it's had not a good month. Year to date's 22. That's pretty decent rate of appreciation. The revenue on this stock is 1.45 billion. All right. PE is a little high. Forward PE is high. Strong buy with the 25% discount on it. When we look at their growth, the growth has been really good. The one thing I would look at is, are they opening new stores? Because organic growth, which is same store sales, that's the best growth. That means that your customers really like your product. They like it so much, they're coming back more often. They're bringing friends to the same location and all that good stuff. And while when you open new stores, it could be positive, but it's not as good as organic growth, same store sales. So we're going to look at that when we review this stock. So the growth is good, and the market's probably looking at that growth saying, wow, these guys are really going to take some share away from Starbucks. Free cash flow, free cash flow of 72 million. Here's where it falls apart for me on, remember how I talked about desirability, do my perfect company, right, is got super high margins, like gross margins are 90%, their net profit margins are like 40%, and their free cash flow margins like 35-40%. They're growing top line by 50%. That's like a perfect company. And these guys are not the perfect company. Gross margins at 26%. That's not a lot. And then you got profit margins of 4%. Not a lot. I can get 4% in a bond. It's very low. And then the free cash flow margin of 5%. Again, kind of beating the same drum on that. So it's not a very desirable business for me. That revenue growth does look interesting. And I think here, let's see. So they have company owned and operated revenues and versus franchise. Looks like they're beginning to franchise. And it doesn't give me store numbers here. Am I missing them? Yeah, it's not giving them here, but I could probably get it from their investor page. And I'll take a look at that when I do the valuation. Let me turn it over to you, and I can start working on a valuation for these guys.
Okay, I just picked up my Tesla shares at 422.865.
Nice.
So we'll see what happens with that one. So we're coming back to Bros. They did have a declining 20-day over the last week to 10 days. It looks to be turning back up. And the 50-day has been declining at least for the last 10 days or so, and it has not yet turned around. And it is testing a 200-day moving average. It did drop below the 200-day moving average in August, and it came down and touched it in April, and touched it a couple of other times and traded below here. So it seems like it has pretty good support at the 200-day moving average over the past year. But if I look at their price, I can go back to February, and this would have been, if I'd have bought it in February, it'd have pretty much been dead money for months, and they do not pay a dividend at all. So you're listening to a dividend investor here. They did have an RSI that's below the midpoint, so it's in bearish territory at the moment. The PPO has just moved. Let's see. It's not quite bearish yet. It's still positive, but barely. It's going to be moving into negative if this price action continues. Oops, I don't know what happened there. The accumulation is not at its peak. It peaked back in May and June, hasn't quite reached that peak, and it's actually turning down at the moment, but the money flow is still positive. So over the last year, it's done pretty well. It started the year at, not this year, but a year's view at $35. So it's done really well, but stalled out since February. But it still beat the S&P by 61%. It's beating the discretionary sector by 50%. It's beating the restaurant industry group by, what is that, 85%? And that group overall is underperforming the S&P 500 by 13%. So that's what Dutch Brothers looks like at the moment. It is at good support right now.
Okay. So I'm putting the finishing touches on my valuation. Okay. So, and I matched it up with Starbucks. Let me turn it over to my screen. Okay, so Dutch Brothers, it's not a pretty picture because it's not a high margin business, right? So their free cash flow isn't very high. It's $73 million of free cash flow, and that's not a lot. So even though I'm growing it by 30%, and I'm growing it quite aggressively over the next 4 years, and then after 4 years, it's going to kind of get into a slow growth pattern, which is typical of restaurants. It's going to have a value of 3.2 billion, but the market cap's way up there at 11.4. And let me double check to make sure I've got my shares outstanding correct. And yeah, I've got that correct. So it's just it's not a really desirable business based on valuation of free cash flows. The stock price is really high. Now, right next to it is Starbucks. Here's the big giant, market share leader, and I don't think Starbucks is an attractive investment either. Okay, so these two don't measure up really well. When we look at earnings per share, it does have a good earnings per share. I can't go past an 18 PE. Maybe I go to 24 since they are growing faster. But even when I do that, it's not a terrific valuation. Restaurants, this is a theory. I think it has some rational thinking and is in it is the businesses that the retail investor can easily understand tend to attract investment. We know what Dutch Brothers does, right? I'm drinking a cup of coffee. I know exactly what they do. Do I think their restaurant has a good idea? In some ways, I do. I think it's a good idea. But the fundamentals are really what I invest in. I don't invest in how easy is it to understand this business? I invest on fundamentals. I invest on what's Dutch Brothers' ability to keep competitors out. It's really hard. You got Starbucks, you got um, other franchises that are trying to attract that consumer. There's no pricing power that Dutch Brothers has. If they doubled the price on their drinks, they'd probably see a lot of their business go away. They'd be like, no way, it's too expensive. I'm going to go to a Starbucks across the street, or I'm going to go to a donut shop, or I'm going to go somewhere else, or I'm going to make coffee at home. There's so much competition. So Dutch Brothers, in my book, is just not a logical investment. It's restaurants that typically end up at this conclusion, because restaurants, I've yet to see a restaurant. McDonald's is kind of the exception, because McDonald's really does have a limited menu, and McDonald's, they don't operate their own restaurants. Their model is, we own the real estate, we lease the real estate to the franchisee. That franchisee is putting in, the 60 to 80 hours a week to make that restaurant successful. And then the McDonald's company is kind of benefiting from having this captive entrepreneur population of restaurant owners. Very different model than versus what I'm seeing here with Dutch Brothers. So it's not an investment I would make, and this is the research that we completed on Dutch Brothers for you. And good luck with Dutch Brothers. And Starbucks, again, is not an investment I would make. It's one thing to trade into these stocks, seeing an opportunity to make some short-term money, but my investing approach is, how can I make lots of money over a long period of time? And these two stocks don't fit that plan for me. So thanks for asking about Dutch Brothers. We are getting
BlackRock Coffee Bar is the one that IPO'd on Friday.
That's right. Yeah. That is absolutely right. So what's the market doing? All right. So we have some positive comments that we may get a deal with China. So market's liking that positive news. We got some green on the screen. That looks good. What about other stocks? What's going on? All right. So we've got Tesla up 5.91% on the news that Daryl decided to buy into the stock. I mean, Elon Musk decided to start buying into Tesla. Real positive news there. Amazon's up 1.21%. Wow, look at this. What's going on in Google land? Incredible. Now that's a number that's surprising to the upside. Let me refresh the screen here. Make sure let me clear my eyes. 3.38. I am liking that. We're going to talk about Google, Daryl. Can't let that kind of rise go unattended. Meta up 0.85. Apple's up 1%. Nice. Nvidia's down a little bit. A lot of green down here. What's going on in software land? They're drinking a lot of Dutch Brothers coffee. Adobe is up after having a miserable couple of days after great announcement of earnings. Their earnings are excellent. What the heck? So, man, this is really good looking right here. All right. So I like that. We're going to have to look at Google after we get done.
I'm not seeing any news, but it's definitely moving up.
Yeah, we're going to have to look at it, but we've got comments coming from all directions here. Let me try to catch up here, Daryl, because, man, thanks, everybody. We've got a lot of people on the stream, and you guys are asking a lot of good questions. Thank you. We covered Dutch Brothers for Big House, Shadow Guys, all over the place here. Carlos, great to see you. We've got Justin. I had a great weekend. Hopefully you had a great weekend. And he wants to check out Dell. Dell Computers. So that's on the board, Justin. Let me catch up with comments and then we'll come back to that. And Shadow Guy. Mining stocks. So AEM and Orla. We'll take a look at those mining stocks. Yeah, the Northeast Dunks, Dunkin' Donuts. Is that Dunkin' Donuts? Yeah. And I like their coffee, by the way. Whenever I have to drink in the Northeast, when I'm traveling in the Northeast, Dunkin' Donuts to me tastes good. The coffee. My only problem is that I end up getting a donut, and that's where the slippery slope starts. But if I have Dunkin' Donuts in the West Coast, not as good. I don't know what it is about it. So that's just an aside. All right. Falls Grave. Good morning. China stocks. We'll take a peek. Baba has been killing it because Baba's just got really good business. Their cloud business has been doing great. Yeah, so just noted that Big House that Adobe is up. Good to see that. Last week they had good earnings. Good news from NVO today. Good to see you, Peyton. What's going on with NVO land? What is going on, NVO? So NVO is like, so there was good news out there, huh? Oh, okay. So their diabetes pill also provides benefits for the heart. So that is the positive news. Okay, cool. Very good. All right, so let's get cracking on this list. Thanks everybody for joining. And we're going to get into the next stock up was Dell Computer. And
By the way, the NVO candle pattern after 30 minutes of trading, so this is very early, is a shooting star pattern, which means it looks to be some kind of a reversal. So keep an eye on that jump.
what is a shooting star pattern?
Buyers bought it up, but then they're pulling back. It's also a black filled candle. So they're at the low of the day after the first 30 minutes. So it shot up and now it's trending back down. So keep an eye on that.
Interesting. So it's not like a shooting star. You make a wish, under those
Yeah, I wouldn't make a wish on this one at the moment.
All right. Okay. Moving along. Dell Computer. The Dell Computer is up 1.33, but we're not here to talk about the day. We're here to talk about the company. So Dell Computer, we talked about Seagate earlier. Seagate makes hard drives, and Dell Computer, for the most part, makes laptops, desktop computers, peripherals, servers that go in the data center. And as every company should, they really market that, hey, we're in the data center. Absolutely, you're in the data center. But when you break down their revenue, it doesn't make a big difference, but we'll get to that in a little bit. Market cap, $85 billion, revenue of 101. So remember my comments around desirability. Desirability is based on companies' ability to grow their margins, especially their profit margin and their free cash flow yield and their balance sheet. And you see that this business doesn't have high desirability because you're buying it at a multiple of less than 1 price to sales. So the market cap isn't even as high as their revenue. PE is 18, forward PE of 12. Strong buy, 18% discount, up almost 10%, not keeping up with the S&P. For the 1 year, I don't know that's keeping up with the S&P. 5 year most definitely is beating the S&P. So long term, this has really worked for investors. When we look at their growth, that is an impressive 10.5 on a big number. Look at the quarter, it even looks better. The most previous quarter is growing at 19%. Looks good. And when we look at margins, so the gross margins, not very high, right? When we look at software, the software that runs on these servers, software companies like Adobe are at like 89%. Software is where there's big, thick margins, not the hardware. It's very competitive. Dell has to compete against Hewlett Packard. They have to compete against Lenovo. They have to compete against just a variety of computer manufacturers or assemblers, I should call it, because they, in essence, create a bill of material and then they assemble computers. So these guys here, low margins, very low profit margins. So my desirability is not very high for Dell because of these margins. So that doesn't look great. Revenue does look good, but not great. It's looking okay. When we look at their forecast, analysts, 14 of them cover it. Some of them think it could go up a little higher. And the worst case scenario is that it's priced a little bit lower than it should be. So analysts like Dell. Their growth is going to persist. I can't argue with that. I think that, the data center is going to pull demand for Dell servers, so they can have Dell servers in the data center so they can handle the new workloads related to AI. Can't argue with that. And their profitability is going to go up. So from an earnings per share perspective, this stock is looking prosperous, and that's what analysts focus on. But I focus on free cash flow, because free cash flow is the best measure of a company's true value, intrinsic value. So I'm going to work on my valuation. I'm going to turn the screen over to Daryl and see what comments he has.
So it's had some volatility over the past year, but pretty much trading where it was. They do have an RSI below the midpoint, but it looks to be improving. You can see if it breaks out into bullish RSI. The PPO is beginning to turn over, and it looks like it could have a bullish crossover in negative territory. Keep an eye on that. The accumulation is decreasing a little bit. Looks like the money flow is going negative. This one, unlike Novo, is printing a hammer pattern at the moment, which is more positive than that shooting star. Over the past year, Dell has underperformed the S&P 500 by 3%, underperformed technology by 9%, underperformed computer hardware industry group. They've outperformed. I may have said underperformed. They are outperforming that industry group by 5%, but that industry group is underperforming the S&P 500. It is in a downcline since about the 13th of August. The 20-day moving average is not only declining, but looks to be accelerating at the moment. So that's a little bit of a concern. The 5-day has turned back upward. And the 200-day is good support. So at around 113, you have good support there. And that can be verified by looking at these price by volume bars. Over the past year, the largest volume was in this price range from 113 to 118. That's where most of the volume occurred. And that aligns with the 200, a little bit above the 200-day moving average, but the 200-day moving average would be good support, in my opinion.
Very good. And can you look at Seagate again? I took a glance at it. It was up like 7 or 8% just today.
Yep, 7.65%. It's a big body candle.
Mm-hmm.
but it is hollow, which means that it's above its open.
And a hollow candle is a positive thing, right?
Yep, so it opened at one price, and then if we were at the close, that would mean it closed at a higher price than it opened.
Mm-hmm.
But we're in midday trading, and you can see that bar is colored green. That just tells me that we have an open market. So we
Okay.
can't confirm any. The candle isn't set in stone until the market close, but right now it's a hollow candle, meaning it looks like price is going higher, and we haven't seen any overshooting of that price, so we don't have an upper tail at the moment. So if we look at the intraday, I bet it's just a continue steady increase in the price. Yep. So these are 15-minute bars. Let me go down to 5-minute. Yeah, you can just see it's a steady increase in price. And that's exactly what the candle shape is telling me.
Perfect. Okay. So I'm almost done with my valuation at Dell. Okay. All right. So looks good. All right. Dell Computer. What is it worth based on intrinsic value? And Dell Computer is doing quite well. If you look at their trailing 12 months cash flow, it looks really good. And I think they're going to keep it going. Their growth rates are going to be good. And the business, if I look at the cash flows I expect the company is going to produce in the future, and I take a net present value based on an 8% discount rate, those cash flows are worth 155.8 billion. I add cash, take away debt. So I think the equity value of Dell Computer based on cash flows is 134 billion. So they're trading below that. So there's a discount available on Dell of 37% if I look at the cash flow value of this business. Now, when I look at the earnings per share, it's also very positive. It looks more positive than the free cash flow method. So Dell has a very attractive proposition to investors at this time. I think the stock hasn't run up recently a whole lot. Its business looks prosperous. It's not my favorite business, as noted, but it should do well. It's going to drive a lot of cash. It knows its business really well and can probably execute very, very well. So that is Dell Computer.
Let me show the chart one more time.
Absolutely.
So if you see where the gray line is where I have my cursor, it's hit that upper price 3 times and was rejected there, except for this 1 month period where it shot up to 175 for whatever reason. And then, I mean, it was a hard fall. It may have been driven up with earnings, possibly, and then they announced and it fell. So if we look at this from a risk reward point of view, we could find a top at about 142, and the support is at 113 to 118. So it looks like you have an equal risk to reward. One isn't outsized to the other, which isn't very encouraging to me at the moment. At this point, I would want to see it break out above these highs before I stepped in, would be my personal opinion.
All right. All right. So let's take a look at some mining stocks. Shadow Guy wanted to look at and see if I think you said NVO had a shooting
AEM,
star, right? Let me see if the shooting star is turning itself off. Sometimes stock analysis will do this. It kind of just sits there. Let me close that browser. All right. So AEM, Eagle Mines Limited, down a little bit. Year to date's doing terrific, and 1 year looks good. 5 year, you see that gold wasn't doing much, and then all of a sudden it started really doing things, and it's really gone up. Interesting. And I'm not a big gold investor. These guys are mining for gold, okay? And I'm more Bitcoin, and some people invest in gold. Some of my friends invest in gold. I get why they do it. It's an investment that I've never thought, hey, that's the right investment for me. So we all get to pick our lane. On this guy here, this is a $76 billion market cap stock, revenues of 9.66 billion, PE 26, forward PE of 19.75, and it's a little expensive according to analysts. And it's really based on, is the price of gold going up? And look at these numbers, really good. Consistent revenue growth going all the way back to 2018. It's just been going up. Nicely done. This looks good. And when we look at the free cash flow, it looks terrific. Gross margins look good. Profit margin of 30%. I mean, that looks great. So if you believe this is going to continue, looks great. But I don't know if gold prices are going to stay up. What's your best guess on gold prices? Do you think they're going to continue to rise? They're going to stay where they're at? They're going to come down? What's your best guess?
I think they can continue rising for a while, but if you look over 20 or 30 years, there are times when it does this and times when it stays flat for 10 years. So it's not something that I would buy and hold unless I was a hobbyist, which I'm not. I don't have any jewelry on whatsoever. So it looks like it's on a really good run. It is way above the 200 days sitting at 110.
Yeah, and analysts think that it's going to continue to have a good year, a reasonable year next year. And then for some reason, they think prices will come down or revenues will come down for them.
Yeah.
And it's two things that are probably happening with this company is first, there's the price of gold done. The other thing is these mines, right? They don't have an endless supply of gold. Once you start mining the gold, you're in essence depleting the ore that's in there. So at some point you're going to run out of gold in that mine. So I think if they extract it, they're basically reducing the value of that mine. So at some point they're going to have to go find a new place to go mine for gold. And it could take a while, but that's just a reality. It's not like a endless supply of gold out of this mine. So this looks like, it's your choice, right? Do you believe that gold will continue to rise? And then second is keeping an eye on that particular company's mines, and do they have, like, they probably put it in their earnings that we think we have the mines that we have will be able to be productive for the next 10 years, for the next 5 years. What are they telling investors? So Orla Mining acquires, explores, develops, exploits mineral properties. It explores for gold, silver, zinc, lead, copper deposits. So I like copper, by the way. I like investing in copper. That one looks pretty good. And so this stock here, much smaller cap, it is flourishing 114%. It is up 184% 1 year. Boy, it's really took off when price of gold went up. Looks really good. 3.76 billion. Revenues are good. The PE for the current year is bad, but next year's looks really good. and analysts think it's discounted by 21%. These guys, wow, look at this revenue growth. Incredible. They probably got a mine or something active. They weren't getting gold from it before, but now it's active. So really impressive. This is a younger, but smaller company than the other company. Their gross margins are right there. Wow, 68%. Operating margin is really high. For some reason, their profit margin is a little low, but free cash flows are really, really high for this company. Looks really impressive. So gold's been a good place. You know, my friends that invest in gold, you know, they like it. And I have friends that buy gold at Costco. I should say I've heard of people buying gold at Costco, and you know, that's a way of investing right there. You can have little bars of gold, you know, sitting, you know, next to your stacks of $100 bills in your safe. What do you have any comments on either Orla or Agnico, which is AEM?
We can take a look at the chart one more time. I took it back 25 years just so you can see how it does. So it had a rise from 2000 up to 2002, then pretty much stayed flat until 2006. We had a rise up until 2008. We had the great financial crisis here. But after that, it had a little bit of volatility in 2014, 15, and 16. But I mean, it stayed from 2000. You know, let's just go back to there, 2009 to 2024. It had really gone nowhere. So I don't think this is a buy and forget you own it kind of a trade.
Right. Yeah. I would agree with that. All right. So good stuff. Are you done there, Daryl?
Yes, I am. Thank you.
So I think Falls Grave asked a good question, which was, how are China stocks doing today with the news around the China, you know, deal and kind of in the makings for trade? How are China stocks doing? And here's a list of the biggest market caps that we can trade. Alibaba's up 1.55, NetEase up, JD up, Tencent up. So the first 7 stocks are up. Futu is down. Interesting. It's a good day for me to buy Futu shares. I own Futu. So a lot of the stocks are up. A couple of them are down. Looks like Yum Brands, they're not going to eat as much Taco Bell or KFC chicken over in China. But a lot, XPeng, look at that. This is the EV car company. NIO, the EV car companies are up. And this is, I know we talked about Tesla earlier. This is one of Tesla's challenges is these Chinese car companies are coming out with a very good product at a very low price. And I know they're not coming here to the US. Done. But you think about Mexico, Latin America, Europe, Africa, Middle East, Russia, Eastern Europe, the Chinese EV, you know, with a price of half of what Tesla wants for their car is very attractive. And I think that's going to be a big strain limitation on Tesla for global growth is, hey, I can buy a really nice Li Auto car that is 80% as good as the Tesla for 40% the cost. Well, that's a pretty strong proposition. So Chinese stocks are doing well today, doing really well. And hopefully they keep rocking because I own BABA. I own a ETF that buys into the biggest stocks in China, and I own Futu, excuse me, Futu. So go Chinese stocks. So we have a request for you, sir. We have somebody asking that they would love to see charts on Dave, simple DAVE, and get your thoughts on Dave, which is a new generation financial services company. And it's been doing great year to date. Can it continue to roll?
Yeah, so it's kind of hard to tell. It has had a great run over the past year. It has stalled out since June. A little bit of volatility, but if you bought it in June, you're sitting on just a little bit of a gain, maybe. The RSI is positive. The PPO is above the midpoint. It's trading below a 50-day moving average. No, excuse me, trading above that, but the 50-day is declining. The 5-day is improving. And the 20-day is also improving since the beginning of September. So you have two positive confirming signals with the RSI and the PPO. The accumulation got pretty high, it looks like in about July, and it's stalled out there, but it hasn't, people aren't moving out. The money flow is not quite, it's below the midpoint of zero, but to consider it bearish, it would have to be below 0.05, negative 0.05, and it is not at the moment. So it's kind of in no man's land at the moment. But over the past year, I mean, these numbers are incredible. Beat the S&P by 438, beat the financial sector by 414%, 414, beat the consumer finance industry group by 402%, and the consumer financial industry is outperforming the S&P 500 by 7.26. So it'd really be nice to see another breakout somewhere above 280 range and hold above that, but it's been traveling sideways for several months here.
Nicely done. And I think that Dave has terrific fundamentals, by the way. I think they're discounted.
Yeah.
I'm an investor in Dave, and I think very highly of Dave. I think they could potentially end up like Robinhood or one of these new generation companies that's kind of breaking away from how things have been done in the past and kind of creating a brand new way of engaging with customers and providing financial services. So I'm very optimistic on Dave. And if the stock trades down, for a while, or I should say for the next couple of weeks, I'll be a buyer. Do you want to go over Warner Brothers? I wanted to let you know that your wealth just went up because Tesla's up 14.46%.
Yeah, I bought it 422. So I'm in the hole just a bit, but I was down about 1.5% a few minutes ago, and now it's just about break even.
Okay.
So
Tesla stockholders are 14% wealthier.
Yeah, I mentioned that at the start for Elon. It was up $64 million, his purchase. So, yeah, real quick on Warner Brothers. I don't recommend anybody buy this, but they're up about 58% over the last 2-3 trading days. And the reason for that is they're getting an offer from Paramount Skydance. So they jumped, let me go out a few more days. Yeah, they jumped from $7 or so, and now they're pushing. I put 5 years. I didn't want that. Yeah, they were trading around 12, and then they shot up 30%, and then they shot up another. I can't remember what it all. This is about 58% run over here the last few days. Yeah, 56 right now.
Mm-hmm.
Anyway, this is going to be one to watch this week. There could be some other buyers step in that would have been reluctant to buy them had an offer not been discussed. There are some other streamers that would have been interested in the
Oh.
streaming business and studio business, but not the cable business. But now that an offer's been, and they're going to split up, the Warner Brothers is going to split up. They had already announced that. Then this Paramount Skydance came in, made an offer for the whole company. So now there those other companies, Netflix being potentially one. There's a couple other ones that did not want the entire business. They wanted it after it split. Now they may be forced to make a move if they really want these assets. So this can be an interesting one to watch this week and maybe the next couple of weeks.
And it's been reported that Paramount Skydance is interested in buying, but there's no official offer
No,
yet.
no.
Okay. All right, good.
We're expecting it actually tomorrow, I think, is the rumor.
Mm-hmm. Yeah, and I agree with you that you could see other media companies kind of compete for this company. I mean, I'm just kind of rationalizing this and saying, okay, well, would Netflix want to buy this library? I mean, that's a big library of content. And then Discovery, right, is not like an overly popular network, but I would say that they do have some shows that have a good following, right? Like I started watching after not watching for a long time, Deadliest Catch.
Yeah.
And man, this season was pretty good. I'm like, man, I'm kind of hooked on this show again. Um, so that's kind of a discovery show.
Yeah.
So Netflix is trying to maintain and grow their engagement with their customer. And I would say that Netflix, their biggest competitor is their success. It's they how do they keep growing? It's like, well, you got to have fresh content because that's the problem with being a one trick pony is how does Netflix grow? Getting more subscribers, raising prices. Okay. Well, the population in the US is not expanding. So are more customers going to come from the US? Well, you're going to have to go international. Well, how do you do that? By attracting people with great content. So content is expensive. Netflix is finding that out, right? Producing good shows is expensive and it's risky. You may produce a movie or a show that doesn't do well, and voila. Warner Brothers has 100-year library of content. So I could
Yeah.
totally see Netflix getting into this bidding war. I could see
Apple.
Amazon,
Apple as well.
Apple, Apple, like Apple. I don't think they're going to ever say it, but I think Apple's desperate to become relevant again. They they're losing the relevant battle when it comes to what's the coolest product out there or service. So Apple's in there, and of course Amazon because they have Prime Video, and Amazon has already bought a studio. They bought MGM Studios
Yep.
and Amazon. So I think Apple could be a really good player in this bidding war because they have a lot of money and they have a need for it. they need a splash. They need something to excite their shareholders with, and most definitely that could be it. It's going to get really interesting. Like I was telling Daryl before we started to stream, is I don't need to watch soap operas anymore, because we have plenty of drama in the stock market. Here's one more storyline. Who's going to acquire Warner Brothers? Forget who's dating which celebrity. Like, we know Taylor Swift and, is it Travis Kelce, are the America's couple now. We could just kind of have our own little version of drama on the stock market, and we'll see who ends up marrying Warner Brothers Discovery. Very interesting, sir. So while I have the floor, let's take a look at Google. What's happening in Google land? It's up 4.48. Beautiful.
Still no news, or has anybody seen anything?
Oh, Rolling Stone just declared war on Google. Uh-oh. Oh, the AI summaries on Gemini. All right. So I've never read Rolling Stone, but those that read Rolling Stone, maybe they love the magazine. Was it a magazine or a newspaper?
Yeah, I think it's a magazine.
Okay. Well, geez. The only news is that they're getting sued by Rolling Stone. So the Rockstar magazine is taking on a big tech company and making their stock price go up. I guess the market is believing that the tech company is gonna. It's probably has nothing to do with Rolling Stone. Rolling Stone's not that, I think, powerful. I hate the news on Alphabet, and we opened the stream on this. Is this stock? The market has, theorized, created a story back to that drama, right? That, hey, what's going to affect Google to the negative is AI going to be a threat or an opportunity? Is if AI takes search away from Google, where does that value the company? Department of Justice, are we going to break up Google? Are we going to see a company that's been broken up? So those stories created a substantial sell-off in the stock from $207 a share down to 146, while its peers at the very top of the food chain of the stock market were going up. Well, then once we got through these, stories that were more fiction than fact, the stock began to go up, and it's got this beautiful rise, and it just keeps going. I think the energy to buy into Google is in. We're seeing that over the 1 year, it's up 58%. It's now up 32% year to date, with a very substantial sell-off baked into the current year. So I am just loving what I'm seeing with Google. And I believe that the stock is discounted. It's not discounted as well as it was in the past, because the stock right now, as it sits, as I speak, is discounted by 10%. Now, this is a very desirable business. I will pay fair price for Google. But I'm not buying any more Google shares, because it's the stock that I've put more capital into than any other stock. So that's why I'm not buying. If I didn't own as much Google as I own, I would be buying shares. I would be buying shares every opportunity I had. I would say the same thing about Meta, Robinhood, Uber, and some of these stocks that I own a lot of. But this stock is just, I can't believe the market, kind of talked itself into selling one of the most valuable businesses, period, with a PE of 26. This is after the stock's gone up substantially. PE of 20. You could have bought Google with a PE of 21, 22. And now I think investors are like, whoa, it's still one of the most attractive PEs I could buy out of the 10 most valuable businesses out there. Forward P at 25. Analysts are a little underwater because they didn't keep up with this. They were buying the negative stories. So I could talk about Google for the next 2 hours. I would love to see your charts on Google if you wouldn't mind showing them.
Yeah, I can show you my trades as well. I started buying.
Sir, I see a lot of green there. What's going on?
Yeah. I started buying on May 9th. I only have 45 shares, but that's been a total return of 48.4% since that particular time.
Very good.
So those are my trades on Google. Then we can take a look at the chart.
So Mike, the dividend investor guy, is right there with you. He's up 55% on Google. Nicely done, Mike.
Yeah, this really looks good. So I bought, my first purchase was May 9th. So I bought my first block about right here. And then you can see what it's done since then. I mean, it's 45-degree angle and seems to be accelerating. You can see the rate of change on this. Let me change that back to 20-day EMA because that's what we're used to looking at. This exponential moving average would be what I use for trading purposes, which I'm just holding right now. So let me get that set back to our standard. So the 20-day, the 50-day, and the 200-day, the 20-day especially, the rate of change on this 20-day is really accelerating here. I don't know where we're going to end up. We're at all-time highs. So I don't really know what made me, I'm trying to think of what made me purchase this other than it was so discounted and seemed to be working its way up from the bottom. I may have just decided it's worth taking a risk on. But then when it broke out, I'm surprised I didn't buy. In fact, I did. I actually tried to get some more here, and it just didn't hit my price. That's probably a stupid mistake in the long run, but you never know. So, and it did break out somewhere right around here, and it's been on a super run since
So
then.
Google Alphabet becomes the fourth company to reach 3 trillion market cap. And I've said this before, and I've said this for like the last 6 months. I believe that Google Alphabet will be the most valuable company on the exchange in the next 5 years. And the reasons for it is their business is just so darn good, and they have businesses that are so darn good. And now they've passed 3 trillion. And if they really start, you think about their cloud business. Let's talk about their cloud business for a second. Last week, we saw cloud infrastructure just take off. Alibaba, Oracle, it's even CoreWeave, you could say. Well, Google's got this tremendous cloud infrastructure business. That's a catalyst. YouTube is growing faster than any other streamer out there. That's a catalyst. And they don't have to buy Warner Brothers Discovery. They've got you and I creating content on YouTube. They've got the world's biggest media companies putting their content on YouTube. Why? All the eyeballs are going to YouTube. So just a tremendous company. And I love stock investing because it makes us think big picture, makes us think of theory, philosophy, strategy. And when you see the market sell off a quality business like this, you need to pick a side. Are you going to go with the herd, or are you going to, use your research Are you going to think for yourself and invest, and not necessarily to be a contrarian, but you are on the contrarian viewpoint, and then see an investment like this kind of do what it's doing now. Super fun. Back
Yeah,
to you, sir.
I'm looking back 5 years because it is overbought at the moment. But if you look at this level, it has never been this overbought in the last 5 years. And
Okay.
also, every time I see it overbought, it is less than a month. This is about 2 weeks. And then we've got, maybe just 1 week. We have a couple weeks, 1 week. And then let me get back to, now we're back to it being overbought. It's just a couple weeks, but it doesn't look to be slowing down. Look at this PPO. Let me go back to a year. Yeah, this well, let me go back to the 5 years and just see if, yeah, this is the highest PPO we've had in 5 years. Previous was down around there 2-3 times, I see. And so we've never been at this PPO level in the last 5 years. Look at the accumulation. We haven't been at this level of accumulation in 5 years. That tells me there's just some big players stepping in.
Well, Mike,
Also,
Mike, the dividend investor guy, is a owner of Google. So
yeah,
carry on, sir.
there you go. Uh, did they report? When did they report? Oh
It's
no,
been,
this was their this was the announcement about the FTC investigation. But look at that volume.
yeah.
Yeah, this is just doesn't look like it's slowing down to me.
Nope, nope. And they announced, I think back in, so October 28th is their next announcement. So that puts it at end of July is when they announced.
Yep.
So we're around the corner from their next earnings. And you think about this business, it's a big, gigantic business, 371 billion, 13% revenue growth. So let's put that in dollars. 13% means that they're growing this line by $40 billion plus each year. And it's going to continue to get bigger and bigger. So in a year, they'll be over 400 billion. In 5 years, they'll be like 600 billion. And that amount of revenue creates profit 31%. Okay. So the profitability of Google Alphabet is so desirable, incredible, fantastic. Like we look at Tesla, right? It doesn't even have a gross margin of 31%. Google Alphabet has a profit margin of 31%, and they're growing at 13%. So this business is loaded. And you think about it from a strategy standpoint. Is YouTube going to be smaller in 5 years? No, it's going to be much bigger. They pulled off the NFL game. I don't know if people watched that. I watched it. Very good. They even shot a person out of a cannon at the very end. That
Oh
was,
wow.
that was so neat. Their search business, it's continues to grow, and it's a massive cash cow business. Their cloud business growing at 26%, growing faster than Microsoft and AWS. Their robo-taxi business, that's real, and it's the biggest, and it keeps going live in more cities. It's soon going to become, Waymo is going to be the most popular robo-taxi service that we can take. They've partnered with Uber in some cities. And so any way I look at Google, it's like, how did the market doubt this business? It's like just it's really amazing that the market provided such an opportunity to us in 2025 on this great company. It's the same thing I was saying about Meta when it was sold in 2022, right? It was, you could have bought shares for $85 a share. Now Meta's trying to get up to $800 a share. So the market will give us these fantastic opportunities on very well-known businesses, as well as small caps or mid caps. But when it happens at this scale, it's really, really interesting, gratifying, rewarding to see a company like this really come back. So go Google. And yeah, it's a $3 trillion market cap company. And we'll see if it continues to go. Well, some big stocks are moving up. So let's see where we are with the indexes. The Nasdaq's up 6.64%. S&P's up 0.45. Dow's up 0.22. Chinese stocks are working. A lot of things are working today. And let's do the heat map. And we've got, was Tesla settling down? I thought it was up 14%. Anyway, so Google's up. Uber's up. IBM, Apple, GE is up. Looks like the software space settled down. It was a lot greener earlier. So, all right. So we covered all the requests. Let me check the chat.
Let's take a look at Federal Express. Their
Let's do it.
report this week.
Yeah, and they report on Thursday.
Yeah, let me take a look at Tesla intraday before we do that. Yeah, so they've leveled out. They've leveled out a little bit, little downward pressure. I can see by that down red arrow there on the price. Okay, but this is going to be at least probably a 2-month hold for me. So let's go back to FedEx because they're reporting this week. This is not one that I own. I unfortunately own UPS. That's been a painful ride. FedEx has pretty much been flat since the April tariff lows. And people are going to be watching this company this week to see their mention of tariffs and how that's impacting the shipping business and the overall impact on the economy. They're kind of at the footwork of, our economy and moving things around. But one thing I can see on the daily chart is they are positive on RSI as of today, and they are positive on PPO just barely. For the last 2 weeks, they were showing weakness there, but now as we get to within 3 days or 4 days of earnings, I don't know if they report before or after. Do you know?
After the market closes on Thursday.
Is it after or before?
I think
UPS reports before. Okay, they're after. So we still have 4 days of trading to go, but sometimes whisper numbers start coming out ahead of the earnings, and sometimes this can be a good sign if it starts moving into positive territory before the earnings. Not always. Sometimes the air gets let out of the balloon, but we'll see there. So accumulation's been flat. Money flows are currently positive and looks like they flattened out over the last couple days. Let's see, not a whole lot of volume. Looks like it's going to be an average volume day, and they've underperformed this year, just like UPS. The only reason I wanted to cover this one is just because they do announce earnings this week, and they're kind of a bellwether for our economy.
Yeah, I agree that I like looking at the shipping companies, because if their volumes are going up, that means the economy is doing well, because people are shipping things they're buying or selling. So it's a measure of economic activity. So I agree with that. Specific to FedEx, FedEx and UPS are dealing with the competition from Amazon, and it's almost like it's a double negative. They lost Amazon. They're losing Amazon as their biggest customer. And Amazon is competing against them because Amazon wants to control the delivery to the customer because they're obsessed with, we can get the product to you in 2 hours mentality, right? Which is quite impressive, right? You can go on their website and say, I would like this product, and it shows up at your doorstep. Incredible. So it's a double negative, and I think it's getting the Amazon business out of the system, so to speak. And if they could begin to grow organically in other places, I think we have something because the stock is sold off. It is a very good business. So is UPS. And maybe this is a long-term winner, but you got to know when to begin to buy into the stock. It has very low PEs. It has again, a quality business. It's not going to go anywhere. It's going to be around for the next 50 years. And look forward to seeing their earnings on Thursday. All right, good stuff. So really, really good stream. We've had a lot of people. Little Jay, great to see you. And thanks for joining. Thanks for all the comments. Thanks for all the chatter. Did you have something there, Daryl?
Let's just take a look at the economic data real quick. So we have retail sales tomorrow. Comes out, tell us how the consumer is holding up in this economic environment. Something that I don't usually look at, but I've been interested in because of tariffs, is the import pricing. It was actually down in the prior month. Mortgage applications is something that I'm interested in. I am an owner of Rocket shares, held them for quite a while. And as we see this number improving, that could be very helpful. I need to check to see if refinance is included in this number or if that's a separately reported number. But refinancing could be big here in the future if the 10-year treasury rate comes down, because that's what's tied to mortgage rates.
Yep.
And building permits for the housing is something that I've been watching for several years. The number of housing starts. Wednesday could be the market mover. That's when the FOMC holds their policy press release and his little speech. We're expecting right now a 0.25% rate reduction. There is talk of it possibly being what's currently being talked about is 3.25s for the rest of this year.
Mm-hmm.
If they think that the economy, especially the jobs market, is weakening faster than expected, then it could be a 50 basis point cut this Wednesday and only a 25 for one of the remaining two meetings in the end of the year. So it's going to be interesting to watch this, and I'll post my summary notes in the Discord group right after that meeting. And then jobless claims and continuing jobless claims is something that I watch quite frequently. This actually jumped up about 23K last week. That was the first big jump that we've had. The estimate has been bumped up for this week as well. So those are some of the economic reports that I'll be watching this week.
Yeah, thanks, Daryl. Good stuff. So economically, it's the week's got some important decisions and information coming up. On the unemployment side, I don't think we have an unemployment problem yet. Like, it's not like concerning, but it's certainly heading in that direction. So I think that might, I agree with all your comments. I think, I mean, the Feds, this is where it's time for them to shine, and hopefully they do the right things with interest rates so they can kind of get this economy to be a little more active, and we can stop the job losses, because we don't want to get into oh no, unemployment is up to 5, 6, 7%, right? That'd be really, really painful.
Once it gets going, it really accelerates. So you don't want to let the cat out of the bag, I don't think.
I know. I know. It becomes really painful. And what ends up happening, back to the drama that plays out, and the news coverage is just relentless when it comes to job losses and unemployment rates. And they start talking and showing examples of how the hardship of Americans, which is real. And everybody gets scared because it's like, man, that could be me. I don't want my family to be under threat of us losing our home, or, things like that. So hopefully the Fed, it's their time to shine right now. It's like, hey guys, this is you. If you keep this economy out of hard recession and heavy job losses, you deserve a pat in the back. But flip side, if you don't, you deserve the blame.
Yeah.
Part of it, at least.
Yep, exactly.
All right, sir. That is a quality stream, if I may say. Let's shut it down so we can go about our business day here.
Little Jay does have one question for me.
All right. What is that question?
Trump is supposing companies not report quarterly earnings, but go to semi-quarterly earnings. And how do I think that would affect the volatility for options? I think it'd probably decrease the volatility over time. I've actually thought this way for a long time because I worked for large corporations that had to report quarterly. And it really makes you short-sighted, in my opinion, when you have to, when the end of the quarter is something that you have to target or you get punished by the stock market. It hurts any long-term planning. That's my personal opinion. I felt that way for a long time. So I would not be opposed to that, other than me and Victor not being able to do as many live streams on earnings reports.
Well, I have a different perspective on that.
I'd love to hear it.
So 50 years ago, it would take, a small army of accountants to do your financials, and
Yep.
for you to deliver financials 50 years ago was quite an expensive, and it required a lot of man hours. Today, our systems, you can report a week later. You can report every month. It's not about, is it hard? So technically, and the level of effort wise, and now we're going into AI, right? So I'm actually on the side of, we live in a world of real time, right? I'm looking at a heat map. This is real time, right? And I think it would be a step backwards if we said, hey, Google, you don't have to report 4 times a year, just twice a year. It'd be like, no, everything's real time now. I need to know as much information as I can on my investments. So I would actually be on the side where I would like to see companies stay with quarterly. And heck, like what's that dividend payer? Realty Income, is that right?
Yep.
They pay every month.
Yep.
Investors love that. That's harder. That's a higher level of accountability. They pay a dividend every month, right? Well, imagine if we had a company out there that said, hey, we're so well run, we're going to report every month. I think they would stand out. And I think
Yeah.
some investors would be like, that business, they want to be transparent with their owners. At the end of the day, we're shareholders, we are owners. And I dislike if a management team doesn't tell us what's going on, doesn't keep us informed. So I would actually be on the side that, hey, I'd like to see companies tell us more because we're owners. And we're going to end up finding out. What's going to be worse is it happened 3 months ago and you kept it from us, or it happened 6 months ago and you kept it from us. That's worse because now we lost faith in the management team. And
Yep.
it's better just to get it out there. Boom, this happened. It's bad. And this is how bad it is. And this is what we're going to do about it. Or, hey, this happened. It's good. And this is why it happened. This is how we want to take advantage of it. All those things are, I think, I would say that the world is now put together where we should actually accelerate the timing of companies reporting.
Yep. That's a good point of view as well.
Yeah. All right, sir. So I wish you a very good day. Thank you so much for co-hosting this live stream.
Same to you, Victor. It was a wonderful stream.
We're going to be streaming together in this format on Wednesday morning, same time, and then on Friday. We're also going to co-host a FedEx earnings stream on Thursday afternoon. And I'm going to organize the agenda with Daryl, but I was thinking we could most definitely go over their earnings report. But I think in the middle of the stream, if we could listen to their management team speak, and then Daryl and I will comment on what we heard from their management team, I think that would be interesting. It's a little bit of a slow week when it comes to earnings, and I think we could take a step back and do that.
Yeah.
I did that last week for Adobe, and judging from the comments that I've received, viewers thought that was interesting. And the only thing I wish I could have done different from last week is I wish I had Daryl with me because I had my comments that management spoke, and it would have been really cool to hear what Daryl thought and maybe looked at the charts and so forth. So here's the opportunity. We'll try it out and let us know what you think. And as we approach the big earnings, we'll just keep getting better with what agenda we should have on these earnings reports.
Okay, and I'll keep everybody updated on that Tesla experiment. We'll see how that goes.
Yeah, please do. All right. Have a good day,
All
everybody.
right. Thank
Good
you,
luck.
everyone.